Hi, this is Paul from globaltradingsoftware.com, and this is a swing trading tutorial using our Elliott Wave indicator suite. Just one of many swing trades that I'm in with stocks at the moment. This is Zoom on the daily time frame. Been in this about 7 trading days now with the inner circle, and just wanted to go through the criteria really for me getting in this trade more aggressively than usual, the setup, and then potential targets, and then obviously the trade management and that sort of thing. So first of all, Zoom daily time frame, we had a pullback. We had a wave 4 pullback, which is a profit taking pullback, which is normal behavior for a stock. But the Elliott Wave indicator suite measured this behavior in a few ways. So first of all, the wave 4 found support. We got all these big tails on these candles in the red zone, so that represents 75% probability that the price action will go and the price will go and reach this automated fifth wave target zone around about $425 in the center there. We can see that the body of the candles actually did find support in there, so all those prices were rejected in that red zone and all the bodies were in the amber zone, and that gives an 80% probability that it's going to go on and reach that automated fifth wave high. So that's good. That's a good sign that that's working fine. Also, we have the bias indicator under here is part of the swing trading bundle. That goes green on this candle here. That's a good sign that we are on a higher time frame. We're bullish. But one of the main things that we look at here is two big things. The stochastic. Now, prior to the wave 4 pullback, the yellow dots on this wave 3 move represent what we call false breakouts. So that's where we get the stochastic wanting to break, to cross over and go back down into the oversold zone, but it doesn't. It crosses back again. So it's breaking out falsely. That denotes a really strong bullish trend, and these yellow dots are automatic. But then when we pull back on this wave 4 and we cross over in the oversold zone against these false breakout dots, it's like an elastic band. It wants to return to that overbought zone and become that and those false breakouts again to resume that bullish momentum. The next thing is we use the Elliott Wave oscillator down here, and what we're looking for, and I'm going to measure this to show you how we measure it, during this wave 4 we're looking for a crowning between 90 and 140% of the highest point on that oscillator during the wave 3. So to measure that, we just use a fib retracement. What we're going to do is we're just going to put it on the 0 line, click once. I've already got this as default. Click it on the highest point of this wave 3, and as you can see here between 90 and 140%, that Elliott Wave oscillator crowned and is coming back up again. So we've got some excellent behavior for this wave 4. It's ticking all our boxes. But the last thing I use, and it's a free indicator on TradingView here, this is the TradingView version of our Elliott Wave indicator suite, is this regression trend channel. So I'm just going to delete that, show you where it is. If you go into the tools on the left here, the second one down, and we can see all, if we click to the right with trend line, we go all the way down, regression trend. Click on that. Then what you want to do is click on the highest point on the wave 3, the lowest point on the wave 4, and click OK. Now we want to make sure that we have Pearson's R connected here. So if you're going to style, we want to make sure that's checked here, that the Pearson's R is selected. This is important. This is this figure here. If I just zoom in a little bit, 0.955476162. So this measures this regression trend channel, and anything over 0.9 is a very nice orderly profit taking pullback. So that basically we've got 95.547% and so on and so forth. So this is a very, very tight orderly wave 4 pullback. When I get a Pearson's R over 0.9, I don't wait for the price action to actually get above this 6-4 moving average high, the green moving average here, because that would be our conservative entry if that Pearson's R was less than 0.9. It isn't. it's higher, so we go aggressive and we go make sure that we have price action moving out of this regression trend channel here. Okay, so the price action's moved out, and then I had an entry at 366.21 here, quite aggressive. You know, I went back to this candle here, and when we look left, you know, we were above all of these, you know, these sort of wicky candles here, and this indecision doji candle there for the 366.21. So we've been in this 7 days. We also can see these purple and grey, what we call EMA clouds. Now this is important, that the grey is now going back above the purple, because the grey is 55 EMA cloud, the purple is 89. So one of the things we look at here is, this is on a wave 4 pullback especially, do we get that non-linear support from these EMA clouds? And we certainly did. But not only that, the 55 is going back to where it should be above the 89. So this, you know, there's a lot of things telling me to go aggressive into Zoom. So we're in 366.21. We've got a target of 425 on the fifth wave. We have got some, if we look left on this wave 3 pivot, and we've got another pivot down here which was quite sufficient enough for us to draw a little zone here around 405. So when I'm looking for my risk to reward to the fifth wave target zone, I want to make sure I've got enough fresh air to this wave 3 as well, just in case it decide, you know, the market decides, you know what, that's high enough, I'm going to start taking some more profit. So, you know, the stop loss being just below the wave 4 low here, the entry 366.21, my risk to reward is over 1 to 1.6 to that wave 3 high. It's 1 to 2.6 or something like that into the fifth wave move. So I've got lots of fresh air. Now I am going to be managing this with our new The Manager trading indicator, which has not been released yet, and I'm going to show you a preview of that on the Motive Wave platform at the moment, because that's where we've developed it first. But one of the things why I'm going to manage it with that is because we've got a swing trading setting on that management tool, and it's purely trade management. Because I actually did trade Zoom last year on this move all the way up to 580 to the highs there, and that was a fifth wave move. It's gradually come down, then we're in this short-term bullish trend right now from May, and I want to give it plenty of room, not just this fifth wave target zone, but if we can break this high here around about 451, we've got fresh air to the highs. Now people tell me, why do you just trade the fifth wave? Why don't you trade the third wave? Because at the time you don't know if that's going to be a third wave. The highest probability move is the fifth wave, but if there's enough momentum and it pushes through that fifth wave target zone, and that wave becomes longer than this initial third wave, the Elliott Wave indicator suite that we have automatically relabels that a wave 3, because the rules have changed. The wave 3 has to be the longest. Now if this fifth wave then becomes longer than this original third wave, you know, that's how you get in that third wave. And the likelihood is, if that happens, and we're managing it with our new The Manager indicator suite, which is purely for trade management, and we've got it on the swing trading settings, we should be able to give it enough room to give it a chance to push through this resistance for the fifth wave target zone and this resistance, and then get in that wave 3. Because if that fifth wave turns into a third wave, we could see it hit these all-time highs and then pull back on a wave 4 and then add some more. So this could be a long-term swing. At this moment, I've not got a crystal ball. I don't know what those earnings are going to be like at the end of August, but right now I'm in it. We had some great, you know, we've got some good days on this now, so we've got some extra volume coming in, and we're in profit. So now what I'm going to do is just minimize that, and this is Zoom. I've not got the Elliott Wave on there, nothing. All I've done is, you can see this third wave, the fourth wave pullback, and this is the trade we're in right now. So there's a couple of things on this that we're developing, and TradingView will be the next version. that we're doing this. So we're going to look at colouring the candles for volume behavior. So when we see green candles, these are accumulation candles. So these are higher volume than the previous candles. This grey candle before was an up candle, but it had less volume. It was running out of juice. Then we see a green that's got more volume than the previous candle. Then the next candle is green, that's got even more volume. So we're accumulating, okay? And we can see the next candle's got even more volume, okay? So that's one thing we're looking at. But then we're looking at average volumes as well. So you see these little dots on top of the candles here. When the dot's on top of the candle, that means it's higher than average volume as well. So that momentum's really picking up. And you can see we did have a little high volume pull down into that wave 4, but then we found support, and then we had this green accumulation candle plus that higher than average volume. That then is a great sign, and this is the candle that took us in with higher volume, average volume, and the accumulation volume as well. So this is momentum's really picking up. So those two instances are good, but then we've got this very, very special bias cloud, and the settings on swing trading at the moment, there are 3 settings for day trading as well. But you see that's green now. If I just move back into Zoom, you can see here the short trade that was on here. You can see the bias is red, the bias is red, and then it turns to green here, and that's where you would get out the short. Or you'll start to see these increased volume candles, but also average volume increasing, and you get out earlier. You've got options, and I'm going to be making training videos to use this to really manage these trades to get the maximum profit. But then when you see here, you see the previous bullish move. It's a very, very long bullish move, but on these pullbacks you don't get duped into selling, because this bias becomes very, very strong. However, when we get the red candles with the high volume above on the distribution candles this time, so that's higher volume to the downside, and we get a couple of candles here that say, you know what, this is higher than average volume, plus also their distribution candles as well, that's the time to get out. That's the aggressive exit from this bullish move. If you wanted to play it conservative, you would wait until this. So we'd get out here around about 400, but then the bias for the trade, the manager bias, also gets us out here around about 386. Okay, so not as big a win. So we've got those options there. So I am actually going to manage this, and I'll make update videos as this progresses, using this new tool. And now this has taken 6 months to develop, because I know what I wanted, but then the developer had to try and make it happen. But this is probably the first indicator out there that is purely just for trade management, and I am going to be using this on the swing trading setting to manage this Zoom trade. Okay, so hopefully that helps. A little insight into this new trade management tool, but also the basics to set up those swing trading opportunities with stocks using our Elliott Wave indicator suite, which is part of our swing trading bundle. So hopefully that helps, and I'll speak to you all really soon.